Good morning, ladies and gentlemen, and welcome to another Smartkarma research webinar. We have with us today Hemindra Hazari, an independent insight provider on Smartkarma and a specialist on the Indian financial sector. The topic for today is, of course, to briefly discuss latest announcements and developments at Yes Bank India, and also to go over what his views are with respect to the rest of the financial sector and implications. Good morning, Hemindra.
Good morning to everybody.
So Hemindra, we understand that we've got just 15 to 20 minutes with you today. So we will keep this very brief and to the point. Hemindra, could you very briefly just run over the developments over the last 12 hours at Yes Bank?
Yes Bank for some time now, for the last about a year, has been trying to raise equity funds. Optimally, it required about $2 billion in equity because of the perceived asset quality issues, which, mind you, a lot of it has still not yet surfaced. So as we know today, the bank on reported numbers appears solvent. However, it appears that most institutional investors had a lot of concerns about the bank, and therefore the kind of equity funds it required, it was unable to raise, although it kept informing the market that they had interested parties. Now, there was a timeline given to this bank, and it appears that there has been a deposit outflow in this time. And also some of the companies they lend to, like for example, Reliance Infrastructure, where they had a very large exposure, defaulted, and all these disclosures became public. And it was shown in these disclosures that Yes Bank had the largest exposure. So I think all these events culminated, and finally, I think the Reserve Bank of India, I think had given a long leash in terms of time to Yes Bank to get the necessary equity funds. But I think it became increasingly clear to the market and finally to the regulator as well that the market and the institutional equity funds were unable to are not willing to give any equity to this bank. And therefore, late last evening, the Reserve Bank of India and the government put it under a moratorium. And therefore, the bank at the moment, depositors can only withdraw up to an amount of rupees 50,000 in the next 1 month. There's an outer limit of rupees 500,000, but for that you have to convince the bank and the administrator that there is a special requirement in terms of medical reasons or case of a wedding, etc. But effectively, the bank has now lost its deposit franchise, and the largest stakeholders in any bank are its depositors. So in the next 1 month, we hope that the RBI will be able to merge this bank into a larger bank, and the name that is being talked about is India's largest bank, the government-owned State Bank of India. If that happens, then the depositors, at least in Yes Bank, will be saved. But as of now, the equity shareholders in Yes Bank, their value of their investment will be zero or very close to zero. So this is where we stand today. This is a case of mismanagement under the earlier CEO. It could have also been called out much earlier, but unfortunately, both the sell side, who have been closely monitoring this bank for many years, refused to call it out. And even the business media till about 2 years ago was giving this bank the Best Bank Awards, and its founder CEO, Mr. Rana Kapoor, the Best Banker of the Year awards. I mean, there are awards galore that this bank has got, where any in-depth analysis, even at that stage, could have revealed that this was a very high-risk bank. So in my view, this could have been called out. The market could have very easily disciplined this bank much earlier. it declined to do so. The regulator could have taken action also much earlier. The regulator also did not do so, and that is what has led to this current situation.
Thank you, Mahendra. The question now is, you mentioned State Bank of India is one of the names that has been spoken about. I think SBI also issued a statement overnight. There has also been talk that there will be a consortium that includes LIC. Could you perhaps talk about the impact on companies that look to bail out Yes Bank here?
See, the main bank that is being talked about today is the State Bank of India, and the other one where the name has been mentioned is the Life Insurance Corporation of India, which is not listed. Some of the other media reports have also said, because of the precarious nature of some of the government banks, which are typically used to bail out private sector banks, there will be the private sector banks will also form part of this consortium, and names like HDFC Bank, IndusInd Bank, ICICI Bank, Kotak Bank have been mentioned in one media report. Now, the issue is this, that if they all just take an equity stake, and the view is that because they have taken an equity stake in the bank, additional equity funds could come in because the market would be reassured that these banks and these institutions now are holding prominent stakes in the bank. Then it just is a temporary problem and they will get equity funds. But the issue is, once a bank is put under moratorium, it loses its deposit franchise. And the largest stakeholders in a bank are the depositors, because a depositor today can only withdraw up to 50,000 rupees in the next 1 month. The moment that moratorium is lifted, they are going to pull out all their funds. No one will want to stay on in this bank. So its deposit franchise has been totally lost. And that is the main issue here. So the only solution is either, it is merged with the bank and all the liabilities are met, or that the losses are borne by the depositors. So now, which so far till date, the Reserve Bank of India has not let any of these commercial banks fail. So that these are the only two options. I really do not see Yes Bank surviving as an independent entity from here on.
Hemindra, can we talk about any contagion risk now in the financial sector because of this? Are there other banks where the deposit franchise might get spooked by this moratorium? And also, if there are other banks with deep exposure to Yes Bank that would get affected?
See, by now, what has happened is that one is the Indian economy has been going through a very severe economic slowdown. Some of the numbers of the macro economy give you an indication, but in reality, it is much worse than what those numbers suggest. So under such circumstances, there is tremendous stress on the financial sector. And loans which were genuinely good quality loans about a year ago may have also deteriorated because of the state of the economy. In such an environment, when a large private bank is put under moratorium, there is going to be apprehension amongst depositors. And this apprehension will be there, that even they will be very apprehensive of putting their money into private sector banks, because that is the concern. We've had a cooperative bank which is called PMC, which has failed, and there is no clarity whether the depositors will get their money, full monies back. So therefore, in my view, there will be a contagion effect on other private sector banks' deposit franchise, which also may impact their equity share prices. I really don't see too much of an impact coming onto the government banks, although a bank like State Bank, if it were to take over the Yes Bank, then obviously, there's going to be a loss and its share price will get impacted. So as of this moment, in my opinion, the contagion will be felt. It will be mainly felt by the private sector banks, deposit franchise, and for any government bank which is listed, which is planning to take an equity stake in this bank.
Understood. Hemindra, we're hearing from attendees that actually Yes Bank's net banking login has all stopped working. And in fact, RMs are reaching out to customers and informing that all servers as well as net banking has now been put offline. So it looks like withdrawals, if any, will have to be done physically. Another concern that is being reported is that hundreds of fintech companies in India are using the Yes Bank API. And it might be the case that Yes Bank's UPI transactions are locked out. And this will obviously impact fintechs with nodal accounts as well. Do you have any sense on what this second derivative impact could look like?
Now, obviously, there's going to be an impact because these were the reports that I've been getting that all these payment mechanisms have been shut, which I would imagine would be the normal way. A bank when it's under moratorium, it would be impacted, and therefore, I think it is very imperative that for bank customers now to keep multiple banks as their choice and not to be totally dependent on a single bank. So you're going to have these impacts with the payment providers, especially who have been digital, and some of them have got some fancy valuations. And unfortunately, they also should have, I think in one particular case, their sole provider was Yes Bank. So obviously, that's going to have a problem. So it is thinking for payments providers, it will have their multiple banks as their option. It will be, the impact would be less. But this is normally the way it happened. And frankly, the signs were very clear that it was heading in this direction for some months now. So they should have been prepared for it.
Mm-hmm. Hemindra, quick question on LIC here. Were LIC to participate in a consortium or take a big brunt of the bailout, how do you think that this impacts, its potential IPO, which is very important for India?
It will be a negative impact on LIC's IPO because LIC, mind you, has had a stake in some of these private banks, even, for example, in Axis Bank, where for some years I had also been pointing out that there was a lot of mismanagement. And the question is, LIC with board nominee on that bank, what was it doing? The Reserve Bank of India and the government has also used LIC to bail out IDBI Bank, which is a government bank. Now, since it has taken charge, there's been about a year or a year and a half has happened, but there has been no great improvement. So this great idea that you use LIC because it has a lot of funds and where the government does not want to bail out any institution, it uses LIC. It just shows that so far one does not have much confidence in LIC's ability to turn around such institutions. So coming to your question, it will negatively impact LIC's IPO because we have seen that even when they have got directors on board and they have substantial equity stake, either they lack the competence to turn it around or they just are unable to see and monitor how things are deteriorating. So it does not speak very well of LIC's equity investments in some of these banks.
Understood. A last question here, Hemindra, before we let you go. Which would be some of the other weaker franchises amongst the private sector banks that you would advise investors to be most careful of at the moment?
See, as of this moment, I think IndusInd, now the market's attention will shift to IndusInd Bank. This is another bank where I have been highlighting issues, much before everyone else. And this has also similar issues of very high risk lending to various stress sectors in the economy, like real estate, like some of the media companies, and now also in some of the telecom companies. So I think, in my opinion, there will be some, negative perceptions created in the market. Already we are seeing that in the way the share price of IndusInd Bank has behaved, and the way slowly the sell side is also finally expressing some caution on IndusInd Bank. So in my opinion, I think a lot of the attention will now shift to IndusInd Bank. Also, I think there will be now closely monitored will be Axis Bank and ICICI Bank, at least under the new CEO, has appeared to stabilize its operations. So I think that would be far less impacted. In the case of both HDFC Bank and Kotak Bank, I don't think that would be an issue. However, I think a broader issue is that in banking, you should not merge the ownership and the management in the role. And it should always be separate. That was one of the main problems with Rana Kapoor in Yes Bank. He was both the founder and the CEO. And unfortunately, the Reserve Bank of India has allowed Mr. Uday Kotak in a similar position. He's both the dominant shareholder as well as the CEO. So in my opinion, the regulator should now be extremely careful about segregating the role between the owner and the management. They can either be one, they should not be both.
Understood, Hemindra. Thanks for pointing out that there are some stark stewardship and governance considerations that we will all have to pay attention to while investing in this sector. Hemindra, we know you've got to run. You're going to be on TV for the rest of the day today. Good luck for that.